Welcome everyone to Vested Interest. This is Shane, and before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those who've subscribed to the channel. I really do appreciate it. On this channel, we focus on dividend growth investing, and in this video, we are going to do our weekly portfolio update. We did add $1,904 and some change to the portfolio, so we will cover that. We'll cover any options we were in, any dividends as well. But before we get that far into the video, for those of you who may be stopping by on this channel, we do focus on dividend growth investing. It's not rocket science. In my opinion, the best way to do anything, keep it as simple as possible. So it really boils down to consistently investing, buying dividend growth stocks and growing companies with positive cash flow that covers the dividend and companies with a high return on their invested capital. I utilize both a dollar cost average approach, consistently investing in the stocks in the portfolio on a weekly basis. I also do larger purchases. And when I have a little bit of extra cash on the side or get a bonus or do a side job, I'll throw those funds in the portfolio as well. I do cover all my investments into the portfolio on this channel. That's what this video is. Every week you will see exactly what I'm doing. I do not have a paid Patreon account. I don't have any other websites that I'm trying to send you to or anything to sign up for, nothing like that. But if you would like to help out the channel, if you could do me a big favor, hit that thumbs up button down below if you find any value in the content. Make sure you subscribe to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Click the notification bell down below so you're notified whenever I put out any new content. I do this portfolio update every Sunday. I also do a series, Stock Pick of the Day series, Monday through Thursday when the market's open. We take a look at a company stock that's pulled back, run it through the screener, and see if it makes it on my watch list. There is also the thanks button down below for any of you who might want to buy me a cup of coffee. And I would like to say a special thank you to Jesse Hernandez for the $9.99 thanks on a video I did a couple weeks back there, kind of running through how I review a company, more of a deep dive beyond the initial screener, right? When I'm looking at their balance sheet and their income statement. So go check out that video if you haven't seen it. And again, thank you, Jesse Hernandez. I believe you mentioned you were a firefighter, so really appreciate what you do out there. And again, thank you for the $9.99. Now I'm going to have to enter some bank information so I can actually get this. This is actually the first funds I've received on YouTube, believe it or not, over the last 4 years that I've been doing this. All right, let's get into the video. We will start with options. No options to speak of. Another week where we threw out several, nothing hit. The market's just been crazy. Starts off either really up one week or in the beginning of the week, really up or really down. And this week it kind of started off both. It seemed like it went up early Monday morning whenever I put options in. And then by the afternoon, it was dropping again. So I tried to play options one way and they seemed to go the other way by the end of the day. So no one bid on anything I threw out. Just the nature of options. You've got to have someone on the other end of that contract. And I do options pretty conservatively. I'm trying to keep the shares while collecting options premium. So I'm doing out of the money options, not in the money options or close to the money like some people might be running. Well, options weren't that great, but we did have a pretty good week in dividends. On March 3rd, they started out with Kroger, ticker KR, out of the consumer staple sector, paying us $32.74. I do have the DRIP set, and DRIP stands for Dividend Reinvestment Plan. So that means anytime a company in the portfolio pays out dividends, those funds, the $32.74 in this case, go right back in and buy more shares of the same company. So we picked up 0.5111 more shares of Kroger, and that added a whopping 65 more cents in passive income over the next calendar year. Every penny helps, right? Every penny counts. That'll add to that snowball just like a $5 addition would. All right, more dividends rolled in on the 4th, and I want to talk through this. We did get $372.56 total, but I want to talk to Enbridge first, and then we'll cover the other two. Enbridge actually paid us $156.13. Enbridge, ticker ENB, is out of the energy sector. This is also a Canadian company here, right? So there are some tax implications. My brokerage, I use Ally Bank. They take the taxes out right away for me. So as you can see here, $23.42 was taken out of the $156.13. Those are my taxes. So I don't have to worry about that. If your brokerage account doesn't take out the taxes of foreign companies, you're going to be responsible for them at tax time, right? So mine are taken out right away, so I don't have to worry about it. They just give me the form at the end of the year about how everything shakes out, and I hand that to my tax lady, and she does my taxes. I don't have to worry about any additional taxes coming out of my brokerage account or paying any additional taxes. They've already been taken care of for foreign companies. So What I'm accounting for in this $372.56 here is just the reinvested amount. So just this $132.71, so that's less the taxes, goes right back in and buys more shares of Enbridge, in this case 3.12706 more shares, right? So 156.13 paid out in total, $23.42 taken out in taxes, $132.71 reinvested, picking up 3.12706 more shares. All right, so here is on to the next one. Johnson & Johnson, ticker J&J, out of the healthcare sector, paid us $155.15, went right back in and picked up 0.91483 more shares of Johnson & Johnson. And Waterworks company here, ticker AWK, out of the utility sector, also paid us $84.70, and that went right back in and picked up 0.60431 more shares of AWK. Passive income added $12.87 from the 3 payouts and the new shares they picked up. And last but certainly not least, on the 7th, we received $138.97 from Pfizer, ticker PFE, and that $138.97 went right back in and picked up 5.24823 more shares of Pfizer, adding $9.02 in passive income over the next calendar year. And this is the dividend snowball or compounded interest in effect, right? We already had shares of Pfizer that we had bought. Those shares pay out dividends. Those dividends go back in and buy more shares, and those new shares add additional passive income. That is the dividend snowball, and the hill that snowball is rolling down is time, or pushing up. Maybe you're still pushing it up like I am, so you're still adding capital. I guess the rolling down of the hill part will be whenever I'm able to turn off the drip and start paying myself with the dividends. So as you push up the snowball up the hill, if you're in my phase, it's time, right? And then eventually time will be on the other side where we're collecting the dividends and living off them. All right, so those are the dividends we received for the week. I think it was a little over $600 in dividends total. And then we'll jump to our first new capital added to the portfolio. We did add $1,370.09 to the portfolio on March 3rd. That was Monday, same day we tried to go in and do our options that didn't hit. With those funds, we added 2 more shares to our Alphabet position, ticker GOOGL, out of the information technology sector. Just happened to pick them up pretty close to their weekly low, $166.68. I was hoping this would go a little bit lower, but it actually went the other way after I bought these. By the end of the week, it was back in the 172, 173 range, so I'm glad I grabbed it when I did. 2 more shares there to Alphabet. 6 more shares to our Lam Research Corporation position, ticker LRCX, also out of the information technology sector. And these 2, I believe actually in NextEra Energy, those 3 are all on my stocks to add or stocks to buy list for March. So if you haven't seen that video, go check that out as well. Took an opportunity to get us to 200 shares of Occidental Petroleum, ticker OXY. 6 more shares there at $49.03. Now this is one where by the end of the week it was actually down more. So I could have got this in the $46, $47 range, but that's the nature of stocks. Whenever you see a good price, go ahead and buy it. It could drop more, it could go up. It's just the way they go. If you have a price you're willing to pay and the stocks you're looking at hit those price, just go ahead and buy. You know, you're never going to get a perfect price. Like I said, Google was all by chance, but I happened to buy it at 166.68. If I'd have been buying this any other day, but Monday afternoon, it would have been higher, just the way it goes in the market. You can't time the market. Good luck to those that are trying. And last but certainly not least, for Monday, we added 4 more shares to our NextEra Energy position, ticker NEE. Picked up those shares at $70.49. The new shares we picked up with this $1,370.09 added $21.94 in passive income over the next calendar year. We went back in on Thursday the 6th, added $533.05 more. With those funds, we picked up 3 more shares in our Valet position, ticker VALE, at $9.82. Added 3 more shares to our Comcast Corporation position. This is also on my stocks to buy for March list here. So that was the 4th one of the 4 I'm looking at. Ticker CMCSA, out of the communications sector. Picked up those 3 shares at $35.79 per share. The next 2 are our weekly buys. We buy these every week regardless of the market. I usually buy at least 3 shares of Schwab Strategic Dividend Growth ETF, ticker SCHD. This time I bought 4. at $27.92. And one more share added to our Vanguard Total Stock Market ETF, ticker VTI, and picked up that one share at $284.56. Overall market has really pulled back. SCHD, I think Friday was actually at 28, so it's gone up a little bit from whenever I bought it on Thursday. It's going up a little bit now as well as the Dow recovers. Passive income added with these new shares in the $533.05 at $13.86 more in passive income added. Total invested $1,904.04. Total passive income added with the new funds we added plus the dividends paid out in the new funds those shares picked up, or the new funds added added there, $58.44 total passive income added over the next calendar year. All right, let's run through the sector weights real quick. Communications sits at 11.17% of the portfolio. Consumer discretionary at 2.07%. Consumer staples makes up 8.14% of the pie. Energy at 8.51%. Financials makes up 2.41%. Healthcare at 13.78%. Second place here. It looks like technology took over first place again. Industrials makes up 6.50%. Technology at 13.9%. That is the largest position in the portfolio. Materials makes up 9.02%. Utilities at 8.9%. REITs and real estate at 5.54%. And ETFs, eventually this will be the largest piece of the pie. Currently sits at 10.06%. We add to ETFs every week regardless of the market. So eventually it will overtake the overall portfolio. Over here to the right, you can see the sector weights again, percentages that match up with the pie, and then the dollar amounts allocated to each sector as well. All right, here it is. This is my weekly portfolio update. I show this every week. I want you to see a real portfolio built out over time, the ups and downs associated with owning individual positions, as well as the market overall. That's where VTI comes in. So you can see the overall market ups and downs there. And then, like I said, individual positions will go up and down throughout the course of the year. All companies have a 52-week high and a 52-week low. They can retest those at any time, and they can reset a new 52-week low or a new 52-week high at any time for a number of reasons. I mean, bad news, good news. A war breaks out. In the energy sector's case, we get some bad weather off the coast that impacts energy production, or the wells, with the wells that we have, some of them out there in the oceans and seas. So there's a number of things that can impact a company's stock price, and sometimes they get disconnected from the overall company, right? Negative news, earnings reports, future projections that are off, news about pending inflation going back up, or jobs numbers going down. A lot of different information and news out there can impact the stock market. It's your job to weather the storms and to navigate those markets. And the reason I show this again is because I want to be able to show you what a real portfolio built out over time looks like. Some of you out there maybe think you can't do it. I am not a financial guru. I did not go to college for this. This is something that I've been doing on my own for, I bought my first investment account. I think it was back in 2001 or 2002. Franklin Templeton was the first account I opened. It was more in a broad-based index fund that tracked the S&P, I believe. Now I'm into some individual stocks. So I want you to see that built out over time. So hopefully it can give some of you out there the confidence that you can do it too, right? I'm just an average person like you. I go to work every day. I'm married. I have 2 kids. Again, don't have a background in this. Do not have a background in finance. My parents definitely don't have a lot of money. Neither one of them even graduated high school. So if I can do it, you can do it too. And hopefully this gives some of you out there the confidence to do so. And for those of you out there who maybe just started your portfolio, the other reason is, I know that sometimes you buy a position, then it drops all of a sudden, and you're freaking out thinking, oh my goodness, I'm losing money. Well, not necessarily. If you've done your research, you're in good companies, you picked a pretty good price to buy the company at, and it goes down. Well, if it's the same fundamentals for the company, nothing's changed, that should be a buying opportunity, right? I see buying opportunities in Reddit. I'm adding to Comcast, for example. It's down 5%. Well, if I thought it was a good buy at $39.69, I should like it at $37.58, right? So that's why I show this every week. Don't sell out of positions just because they go down. That's not a reason to sell, unless the fundamentals of the company have changed, right? Then maybe it is. But in this column here, all the positions in the portfolio, the tickers there, total shares, and all of the numbers will be as of the close of business on Friday. Current price in this column, market value here, average cost per share, that's my average cost per share, does include reinvested dividends. My purchase price, again, does include reinvested dividends. Total return here, whether I'm up or down, you're going to see it. Percent return here, if I'm in the red, you're going to see it there. If I'm in the green, the darker the green, the higher it is. What sector each company falls in, whether they're a quarterly, monthly, semi-annual payer, current yield, my yield on cost, portfolio weighting. And here I have a rule in the portfolio. I do not want any one position to be more than 10% of the portfolio, and I do not want any one sector to be more than 25% of the portfolio. That does not include ETFs and index funds. Eventually, ETFs and index funds will be the largest portion of the pie just by the nature of adding to them every single week. Estimated annual income here, payout months here, dividend growth year over year. This does adjust as companies adjust their dividends and where the company sits at 15% of a 52-week low. And this just gives me a high water mark. I think I've covered this a lot. I'll just quickly cover it one more time. We'll look at SYY, right? So I recently added to SYY, even though it was slightly over my cost basis at $69.63. I was adding to it at $70, $71, $72, $73 even. And I was adding to it because 15% of a 52-week low is $79.38. So as long as it's under that, and it still is at 76.51, I could still add it. And really, I can still add it even if it was to go over 79.38. I could still add so long as the average cost, this $69.63, didn't get over 15% of a 52-week low. So this gives me a high watermark for where I want my average cost per share. I actually want it as cheap as possible. I want this as little as possible or as low as possible. But I don't want it to go over 15% of a 52-week high. Okay? All right, so 6,986.84 shares total. Current portfolio value, $349,141. That's a new, I believe that's a new high. Purchase price, $317,109.34. So I have that out of my pocket. That does include reinvested dividends, right? So it's not all new capital. And I say out of my pocket because if I was to turn off the drip, the reinvested dividends would go back into my pocket or at least back into my portfolio. And then I'd have to reallocate the funds. They wouldn't just automatically buy shares. Right now, they're just automatically buying shares. So I'm just calling it all out of pocket dollars. Total return, $32,031.65. I don't really focus on this. It's nice to see that I'm up, but it's not my focus. I am up 10.10%. Again, not my focus. Yield on cost sitting at 3.659%. Or I'm sorry, current yield 3.659%. My yield on cost is actually a little higher at 4.029%. And this is what I'm focused on. That's why it's circled over here in red. And usually this is going up, but as you can see, we were very close to busting over 13,000 last week. We've taken a little step back, not by anything we did, but Vale just reannounced its next dividend payout. And this being a semi-annual payer and out of the materials sector, their dividends are very reliant on metal prices. So steel prices, nickel prices. As they go up and down, their payouts go up and down. And actually, even whenever steel and nickel prices and other metal prices are good, their payouts fluctuate. Usually the one in the beginning of the year is the lower of the two, but sometimes that changes, and sometimes they pay out twice a year, sometimes they pay out 3 times a year. So Vale is a hard one for me to keep a good count on exactly what it is. I adjust it as they adjust the dividend, but I could, by the end of the year, be adjusting this again whenever they announce the next payout, and then adjusting it even another time if they do 3 payouts instead of 2 payouts. So this one is very hard to keep a very good track on. It's not like most companies where the dividend typically just increases incrementally every year or every 6 months or every couple of years. This one fluctuates again for a number of reasons, because they pay it out 2 or 3 times a year, sometimes 1 time a year, and also it fluctuates around metal prices where they adjust their payout based on the fluctuation in metal. So this did go down, is my point. It went down from about 49 cents per share, which was the average of last year's payouts, to their first payout this year is only 37 cents. So I don't know what exactly the average is going to be. So I'm just using that 37 cents. But again, by the end of the year, this could adjust back up, or it could even adjust back down again. But it did bring down my overall total to $12,776.75. So I just want to be as accurate as possible. Whenever dividends are adjusted, that's what these ones highlighted in yellow are. I'm going to adjust it, right? Even if it's down and not to my favor. I want you to see a real portfolio built out over time. And maybe you don't want to get into companies like Vale, where they're not giving you a consistent raise, every year, and they fluctuate with market prices. I've got an uncle who's in mining, so I understand the mining sector a little better than some people might, and I'm all right with that. But if you're not, stay away from mining companies, right? That's all I can say. But we'll probably still bust out of February here. It'll take or March here, the end of the month instead of this week. The end of this week, it'll probably be the end of the month now that will be over 13,000 because we did take a little bit of step back. But sits at $12,776.75. And it also hit, our dividend growth took a hit whenever this went back a little bit, down to 5.61% year over year. All right, that's really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Drop a comment down below. Let me know what you think of the video. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. And again, hit that subscribe button. Join us on this journey to financial freedom. Join the vested interest community. Click that subscribe button. Doing all of those things, the thumbs up, the subscribe button, the notification bell, sharing with anyone you think that might find value, it really does help out a small YouTube channel like mine with the YouTube algorithm. So I really do appreciate it whenever all of you take the time to do that. Let me know what's going on in your portfolio. I'd love to hear from you in the comment section below. What are you buying? What are you adding? Have you been selling anything? And what options are you in? How have you been doing in options? It doesn't look like this in my backyard anymore. We don't have any more snow. It's kind of melted off here in the last several days. Well, this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great weekend, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Investment journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of your certified financial advisor. Hey, thanks for watching. Don't forget to subscribe, hit that like button, share, and drop a comment.